Hey, welcome back. Today I am talking about the updated statistics for the housing market in Wichita, Kansas. We're talking about this is for March of this year. And always remember that I'm a little bit delayed. It's about 30 days delay probably with these statistics that I'm giving you. So, of course, we're right now in spring. We're 3 weeks into April right now. So, we're into the spring market. Things are pretty busy, picking up. Buyers are out there like crazy. So, I wanted to give the statistics for the MLS. I think I'm going to go over mostly the entire MLS housing data, and I'll kind of pop into a little bit of Sedgwick County. And the reason I like to do that is that Sedgwick is more of a reflection of probably Wichita in general. But I like to do the entire MLS because it's not as small as what just Sedgwick's going to say. It's all the outlying counties as well. All the outlying counties. The other thing I do want to go over in the beginning here is just some mortgage data by the National Association of Realtors. So with that, let me get into that and I'll share my screen. Okay, and we'll go into, before we get into the housing stats, this came out April 13th, so a few days ago. So it's saying, although slightly mortgage rates dropped further this week, the average rate on a 30-year fixed mortgage fell to 6.27 from 6.28. Okay, not done. With inflation moving closer to the Fed's 2% target, here's what we want to know is mortgage rates are expected to decrease further in the coming months, likely below 6% by year end. Yes, we are seeing 5% here. This is, again, remember, this is on a national level. In Wichita, yes, we're seeing plenty of 5%, higher 5% interest rates. But again, at least it's showing us that it's expected, the mortgage rate in general is expected to come down in the coming months. And then meanwhile, these falling mortgage rates create opportunities for many buyers. A lower mortgage rate brings down the monthly payment for a home loan. That's the greatest thing. If rates drop to 6%, 3.1 million more households will once again be able to afford to buy in the median priced home compared to the beginning of the year. Of course, in Wichita, Kansas, we are more affordable than the nation in general. And then 1 in 3 of these households are younger than 40. And last year's 1 in 5 mortgage purchase originations had a rate higher than 6. So at least the overall good news I just wanted to share is that it looks like by year's end, so not quite right now, it's going to go below 6% on a national level. But again, but regardless, the whole thing is looking better right now. So with that, let me get to, all right, I believe you can see this. Let me go to the front of it. Here we are. We're looking at March 2023, South Central Kansas. That's the MLS that we belong to in Wichita, Kansas. And the entire MLS includes all the counties: Sumner, Butler, Harvey. So we're looking, Rose Hill, Viola, Newton, Arc City, all of these. So that kind of gives you a quick overview chart. And if you ever want me to send this to you, give me a holler. But basically, home sales, just in general, fell last month to 805 from 891, so not too bad. We're starting to get back up there. And so let's kind of just keep going down here. So this is kind of what we're looking at. So look at home sales, this top row. Current month, we're looking at, again, March. This is a 3-year history, so it goes back 21, 22, 23. So we know that listings have gone down, or home sales have gone down. Look, if you go 2021, 931 to 891 in 22, March. And then March of this year, we're at 805. So, we definitely want to still see that change. But here's the great news. Check the second row out on active listings. Obviously, the theme is continuing that we just have too many buyers for the houses. So we just want more listings. So here we're looking at 627 a year ago and 660 even in 21. So at least we're over 1,000 right now. So if you jump down to month supply, we're increasing the housing supply for the market from 0.6 last year, 0.7 2 years ago. So we're at 1.2. So definitely going in the right direction. We just needed to go a lot higher in that direction because, of course, we're still, now that the season's kicked back in incredible multiple offer situations, especially for the better price points, the 200K-ish around there. New listings, okay, well, that's not looking good. Are down to 968 from over 1,000 the previous years, so negative 18%. Contracts written have gone way down again, not great. Pending contracts, not super down, at least not as, and then the sales volume is down just from the lack of inventory. All right, so let's go as always to the median sale price. Let me blow this up. So here we go. Median change from prior. So last year, oh, well, let's check this out. 2 years ago in 2021 to this, if you can see my cursor, $176,000 you could buy a house for. And then it jumped up to March of 2022 to 193,000. I'm just taking off that 193,400. So it increased there. And then here we are back over the 200,000. And I think it's in Sedgwick County, it's 230,000 there, but we'll check that in a second. So sale price 176 to 193 to 201. So if you want to understand appreciation, this is showing to you, and home equity, why owning a home is such a great deal, because look at your house that was at 176. Let's say your house followed the statistics. If your house was appraised at 176 2 years ago, it'd be around 201,000 this year. So that's just showing the equity. That's I get just that question, have these conversations with rent versus buying a house. Again, not all years are typically like this kind of a jump. Every so many years, we have that huge appreciation jump, and then other years, though, in home sales is definitely something you want to hold on to build the equity. It's not typically works in this direction. So you also got to be careful of that, just in case it went downward, you be decreasing equity for a while. But overall, in general, houses appreciate over the 20-year span. I always say, hey, look, if you buying a house is great. Like if you think you're going to be in something for 10 years, buying a house is much more desired just because you're building the equity than renting where you're paying somebody else's mortgage down. Okay, so days on market, that's increased. We're not seeing that now. Again, remember, these statistics are 30 days old, approximately. Right now, it's probably back to 3. But again, this is looking at March of last year. So it was at 3, although 2 years ago it was at 5. So looks like 6 days on the market. But of course, with interest rates coming down, and the interest rates, buyers have basically realized that, hey, look, this is where the interest rates are. This is what they're going to do if they want to refinance down the road. We had some ups and downs lately on the inflation and interest rates. So, but again, like I just read, it's looking like it's going to be below 6% on a national level. Again, we're seeing plenty of 5% here in the higher 5s from different lenders. And percent of list, yeah, things are still selling at list price or over. At least we're seeing 100%. So we're not seeing 101%, which some months we were seeing that last year. Again, I've been in so many multiple offers recently, so I'm just that's what's happening right now. So closed, these are for closed listings, like 891 to 805. Just kind of look at this here quickly. Median sale price in March was 201,000. It's up 4% compared to the prior year. Again, 6%. I believe those are the data we just looked at. Closed listings. Watch the red line. Look at how much it dropped, but it's peaking back up. Hopefully it gets back up to there. And closed listings by month. So you'll see it here. It just dropped. We're in the 500s. Look at that. There's no other 500s in the last 2 years. So to show you how few houses closed in the entire MLS was in January, only 525. February, 573. And at least we're building it back up. So we're at 805. Again, I see this completely increasing. Just again, we've got over 1,000 houses listed for many months now. And the interest rates, buyers are okay where the interest rates are at now. It's not looking, the future's not looking dismal on that. So, and let's close listing. Let's see by price. Let's check this out. See where the bulk of it is. Well, it's looking like 200 to 250. That no. The high 300 to 400,000 looks like the bulk of where this is closed. So these are actually closed of housing that is. And then secondary is 200 to 250,000. So in these areas, although 300 to 400, this could be some new construction too. So there's less bidding wars, I would say, in the new construction area. So if you can't afford new, that is one way to go. Of course, you got the specials here in Kansas that adds to the monthly payment. If again you want more questions on this, give me a holler. But yeah, let's look at like 200 to 400 is a big chunk of where ours are at. And then we've got $4 million and up closed last month. That's just fun to look at. So, and if you're on my email distribution list, I know I always add $1 million for the top, a really pretty $1 million house, just to see all the beautiful $1 million houses that we do have in Wichita. People don't think of Wichita really for that. They think of the big, East Coast, West Coast, bigger cities. But so I always like to show those and what gorgeous houses we have out here. It's fun. And so, okay, so here we are at the median price. I just got to look at this sheet. Okay, this is for closed homes. So looks like in January, where's my cursor? 186,000 for 2023. A little bit over 2022 and about 10K, a little over 10K from 21. And we're now hitting back up in the 200s. Okay, and we're hitting that, not surprisingly, before last year. Just because, again, look at last year, May through December was all over the 200s. And I always feel there's a little bit of a lag because November, December, I know buyers last year were getting deals because of the interest rates going up to 7 and buyers literally just stopped. But this would have been closed probably from, October. If you go pending in October, you probably close in November. So that's kind of where, so again, the data is lagging a little bit. But in January, really for us, the buyers picked up. It was nice weather out here. It's not reflecting it, but that's, again, because November, December, buyers literally stopped. So this 186 shows closed. So it means the buyers would have put a contract on it in December, most likely, or November. Again, so 186, 185 doesn't surprise me too much, again, just from the lag of buyers stopping in November, December. And the buyers kind of picked up in January, again, with the better weather. And so, yeah, we're just going to kind of keep seeing this increase all the way back up fairly quickly. So, yeah, next month should probably be a decent number. So, and then let's look over here. So pricing, as you can see, let's see, blue is 2023. So regardless of inventory and days on market and all this and that, we are still higher priced than green is last year and red is 2 years ago. So as you can see, it's just showing the appreciation. It's staying true to all the appreciation information that we've heard, and equity, sellers having so much equity. Again, a little more difficult for the buyers right now, but great for sellers. And so still wanting more inventory. Okay, this is closed listings. Let's go to the median days on market. So we're going to see this pop back to 3 real quick again. Season's really kicked in right now, but again, this is 30 days old, just remember. So 6 months, so last year we were already at 3. I would not be surprised if we're at 3 by next month. And as you can see, 3 and 3 actually during the summer months, 3 days, meaning that the houses go very quickly. To give you an example, when I list a house, I list it, let's say, on a Friday. And then right now, because of the multiple offer situation, I tend to keep it open or talk to the sellers, and the sellers prefer to keep it open till after the open house, just to get, give people a chance to get off work on Friday, get and see it over the weekend. And so by the time we end up having a contract and it goes in the MLS, even though we could have had, several contracts that first day on that Friday, since, you keep it open for a couple days, we're seeing by the time we put it pending, it's 3 days, even though it would have, let's say, sold technically on the first day. By the time everyone need all the signatures, you've talked to your seller. So 3 days. So that's just to kind of give you an inkling about behind the scenes on that. And let's check out. So this is active listings. Okay, so we are now talking not about sold stuff, but what's active. This is just great to see, 627 to 1,059. So we've been over 1,000 recently. In fact, I just pulled the MLS here. Active is 990. Now, this is the MLS. This is literally today. This is real time. If I do all, this would include auction properties as well. Is over 1,000. Although I always like to do for sale is at 989. So again, close to 1,000, just to kind of give you an inkling of that. But so that's looking great. Month supply went from 0.6 to 1.2. And then let's look at the median price of homes on the market at the end of March was 310,000, up from 265,000. So it's up 16%. And the typical time on the market for active listings was 16 days, up a couple extra days from a year earlier. So that is looking at active current listings that are actively on the market. This, of course, shows what we don't like is, like, since there's so few listings right now, that's what's creating the bidding wars. That's what's creating the harder time for sellers. And that's taken, the interest rate out of the equation. I mean, it's what basically, even though national is saying in the 6s, I'm really kind of saying it's in the higher 5s. Here's some more active listings data. Again, well, gosh, you look at the past years, look at that, 800, 760, then 650, 600. Then you're looking at least we're at over 1,000 here. So that's great. The reason I kind of take out the auction, by the way, is because, most buyers feel comfortable with going the regular route. Auctions, great for some investors possibly, but you're paying a buyer's premium and other stuff. And, you don't get the easy steps of going through the inspection, this, that, and the other. It's kind of a quick thing. So anyways, that's, a little bit about auctions. And don't get me wrong, auctions are still a great way to go if that's something that you would be interested in. Hey, it allows you still to get some houses. But I know the typical buyers of mine will go toward the regular general houses that are on the MLS. Okay, so yeah, over 1,000 in that regard. And then check this out, active listings. That just shows a ton more than the last 2 years, that's great. Great news. And hopefully it just kind of skyrockets up. That's my dream. I can dream. So here's the actual listings that are now currently on the market. So we see the bulk of it, 230 from the 300 to 400,000. But really, again, the 250 to 500 is from the active listings. So closed listings are up, a little bit lower price point. The active ones are a little bit higher. We've got $30 million properties and up on the market now. Again, like I said, that's always fun. And let's continue on down. Here's the entire month, the active listings. Let's go to median price. And I think we talked about this. 310,000 is where we're at. February was a little bit higher for the median price. In January was lower. So that just kind of gives you for active listings that are currently on the market. It makes sense why it's higher, because you have the new build constructions. Those take longer to sell than the 200K. And we've got median days on market. Against for listings are showing we're at 16 days on market. And then I'm going to jump over to Sedgwick here in a few minutes. Sedgwick County, just to kind of get month supply. We're looking at 1.2. So I just love this. This part's great. For some reason, at the end of last year, it started creeping up. But then, of course, we had this high interest rates in November and December, which kind of slowed the buyers down. But hopefully it made and then new build started, because of that, new build started offering incentives like crazy, and they still are. And of course, in the higher price points, there's incentives. I think those incentives, my gut is that it's going to go away pretty quickly, because again, with the buyers not being able to get the 200K resale homes, new build is a good solution to go toward fewer buyers. And that because new build says, of course, still has the specials. So that's adding to a monthly payment. If you want more information on that, we can talk separately from this. New listings. Okay, I think that's good for there. Let's go jump over to Sedgwick County. I do want to get through. This is kind of the one thing I like to talk about here. So median price, and these are for the sold price, the closed listings here is we're looking at 230. So if you recall, which you may not, but it was 201 or something around there for the entire MLS. And that's because they're including Viola, all the small counties around, which we just have lower populations. They sell for, lower dollars. But we're looking at the big portion of Wichita market is the Sedgwick County market. And so that's why this is more of a reflection of, I consider, what our city is. Like when you're looking at, I think, California, San Diego or something like that, I think it's in the 800,000s now, where to be more comparable, this would be the number of 230,000 for the median price. Let's check out Sedgwick. Closed listing 581. And these numbers, of course, are lower because, but 654 to 581, but again, it's still lower sold houses than last year. And of course, we just talked about that 230 sale price versus 211. Look at the median price. Okay, here's the median. If you can see my cursor. Okay, so it's 211 last year, 230,000 this year. 3 days on market now to 5. And again, that's I would expect it to pop back down to 3. It's probably 3 right now, but again, today's information won't be reflected until next month, since we are still 30 days out. And that's something that I always like to continue to bring up, just because it's like it doesn't seem accurate with what we're hearing, but hey, we can only go stats, because by the time they get the stats and put these pretty pictures all together and get these documents, it's takes some people and putting stuff together, and by the time they get it out to us, it's 30 days later. So I always like to remind everybody that we're big in the season now, so it's not the exact today's date. It's 30 days ago what was going on. We've got 3 closed listings of the $1 million. Again, that's just fun. Looks like the most sold properties was 3 to 400. Again, just the bulk of stuff is in the 200 to 400K range. Median price. And I just like to look at this in general, like it was in the 100s January and February last year, and then it hit over 200 from March onward, and it went to 190 for January, and then of course we're right back at 200. But check this out, 230. So last year, let's check this for median price. There was one at 235. Oh no, there's another 235. I'm just looking to see what was higher than 230. You got 231, 235, 235, and then a 232. So there were, okay, so we'll see what this does. Makes me think we're going to break the 235 price point, median price point for Sedgwick County entire MLS. And yeah, check this out. Look at the red, just again, just look at appreciation. The red was 2 years ago, green is last year, and blue it's going over. So hopefully, again, just getting those more houses. So average days, no, let's go to median. Median days on market. We should, again, we're at 5. So this is definitely longer than last year. We were already at 3 last year. And then through the peak month, summer month, it's at 3. That's when the bulk of buyers are out. And here we are, active listings. So this is in Sedgwick County, not the entire MLS. We went from 400 last year to 746, so that's great. Active listings are at 337,000 this year, with 11 days on the market versus last year at 315,000. Again, this is active. What is currently, these are all the stuff that's on the market. The previous ones we just looked at, those are sold. Those are done deal. Those are, and so those are stuff we can look at comps and comparables when we price houses. This is just active, what's actively on the market right now. Let's see, of course, we just see the active listings go down, kind of peaking back up there in 23, and hopefully we keep seeing these blue lines and the red line curving upward. Active listings. In Sedgwick County alone, we've got 21. I think it was 30 altogether. This, I'm just looking here just for kicks. It was 30 in the entire MLS. Looks like it's 21 here. And let's see what else we can look at. Median price. Again, we're just looking at that here, but just to see all of what this is cool is just that you see all of the months and all the data compared to the chart above, which just is showing the last, well, not all these numbers. So let's see here. What was the highest one we saw? Though we were at 337. Oh, 345 February. That was pretty high. So last year, what was the highest one we saw? Okay, it looks like from listing perspective, we've already, this active listings, I always have to look, just, okay. Looks like we've already jumped over last year's 337. So we've already beat, are we at 330? There's a 330 right there, 329. So 329, is that the highest one I'm seeing? No, 330. Yeah, 329. Okay, a couple of them. So yeah, it looks like we've already, the February just shot it out of the park. Yeah, like I said, we had a lot of buyers, but these are actual listings, active listings. So okay, that's interesting. And then for the active listings, again, about 11 days on market. Oh, we're seeing, okay, so yeah, fewer days on market. Well, last year there was a 5 here. I would expect that to go down pretty quick because, again, the buyers are out and having a hard time getting a resale house. But again, if you know, if your price point's at a certain point, you either just got to keep waiting until you can figure out a different solution, like whether you're able to find a way to go cash to beat out the other buyers. I think I've mentioned this story before where I had sellers that, you know, I was telling them, during the multiple offers, a lot of times the listing agents or the sellers won't accept the contingency of selling your house because that's just one extra hoop they have to go through. They're going to take the non-contingent. They're going to take obviously the offers that are the easiest to work with and the fewest hoops to jump through. And so, you know, my buyers basically turned around, got a rental so we can sell their house so they can then, there won't be contingent after. So that's kind of so people in certain price points, I mean, you've got to almost figure out a little bit and talk with me. I've got various scenarios of how to do that to not be a contingent, or how to get the best, you know, can you get to a point where you're conventional over FHA and VA, or will you take that burden and pay, you know, if the appraisal doesn't, you know, so you look more, just how can you look more competitive with the offers that are out there? But again, call me, I can give you lots of scenarios that I've gone through. So that's, I think, let's kind of wrap it up here. This just goes into like way too minutia detail down here. These are new listings. I think these are like that have come on just during this month, the new listings. So anyways, well, I'm going to go ahead and wrap this up. So yeah, basically, yeah, I wanted to just kind of go over the National Association of Realtor, how the interest rates are looking good for the outlook, looking like at the end of the year. They've been saying this a little bit. Of course, we were jumping up and down, but by the end of the year, should be about under 6%. And then just, again, we just went over mostly the entire MLS housing statistics for March, and couple just at the last year went over the Sedgwick County statistics. But yeah, if you have any questions on how to look better from a purchase point, buying a house in this multiple offer, I've got scenarios to go through, lots of different situations, what you can do to be to make your offer look as desirable as possible. And yeah, other than that, I hope you enjoyed this. If you want the copy of either of these, I can email them to you. Just let me know. And on that, it's looking like a pretty day. It's be 80 degrees today. So go enjoy and have a great one.